Okay, so just imagine that. You click a button and $29,000 comes out. Click a button and $29,000 comes out. That's what she did on one trade. In this video, we're going to review her breakdown and we're going to dig into what made this trade so effective. Now, if you are looking for inspiration for your trading strategy, this video is going to help you. And even if you're not, and you just want to sharpen your skills, this video is going to help you too. So let's see what we can learn here. This is Tori Trades.
All in all, this was a record trade at the time. It was $30,000. So my entry, I got in at $888. So we're looking at around here when the price broke this steepest downward trend line. I went in 20 contracts. I was willing to risk $15,000 if this trade does not work out.
Okay, so already we know something about her strategy. Now she's risking much less than she's looking to make. So the risk on this trade was $15,715. $15,715 to make how much? $29,000. So what that tells you is that her risk to reward ratio is excellent. Now, bare minimum, you want at least a 1-to-1 risk to reward ratio, but this is significantly more, almost 2. So already you can tell that she knows what she's doing in terms of managing her risk, because that's how you structure a profitable trade.
If this trade does not work out.
Now, before we get into the trade breakdown, I want to show you a 60-second video breaking down her strategy in 60 seconds so that when we get into the breakdown, you'll have an idea and be able to understand what she's talking about.
What is my strategy? I truly just trade with trend lines and some support and resistance. I always use trend lines. I'm going to come in with 1 touch point, 2 touch points here. And this is platinum. This is a great example. We've got 1, 2, 3, almost 4 touch points here on this upward trend line. I would get into this position only because the trend line was broken. So we'll just say, for example purposes, we've got 1, 2, 3 touch points on this downward trend line, and then boom, we've got a break of a trend. I would take a long position here. Now we are following up. We're going up, 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 up. I would stay in this position for as long as the trend is happening. And my indication for when it is no longer trending in that direction is when price breaks that trend. That is essentially my strategy in a nutshell.
Okay, so we know that she's using a basic trend following strategy, which is drawing trend lines, waiting for an indicator to enter, and then following that trend to maximize her profits. All right, good. So now we got that. Let's get back into it.
Trendline trades. Today we're going to be going over a 3 touch point break. We're going to go over the playbook, my criteria for entry, my entry itself, my exit, where my trend lines were, where my key levels were, my horizontal lines, support and resistance. And before we do, I always make sure I want to start with, I say always, this is literally the second video, but I want to start this video with showing you guys my brokerage statement for the trade that I placed, just to make sure that you guys can see the validity, my credentials. I am verified. And
okay, so this is why I like Tori Trades, because a lot of people criticize Tori and say that she's fake, but she's about to show you her broker statements, okay, which is irrefutable evidence that what she's showing you actually happened and that she's legit. So let's see it.
We'll get into it. So let's start with my TradeStation statement for February. I'm going to start by logging into the Client Center of TradeStation. There we go. All right, here you can see this is the
okay, so I want to give a shout out to Gilbert in the chat. He said Tori Trades is fake. Hey, Gilbert, let's have a look at this right here, okay? Let's see how fake she is.
Statement of February 29th, 2024. You can see my account number, and here we go. We have the beginning balance is $123,000. The net futures profit and loss is $29,785. And then you will see there is actually an open trade in the negative $4,000 as the statement closed. So that is unrealized, but the realized profit and loss for the month of February is $29,785. This is the one trade that I did place in February, and this is the one we are going to go over. All right, so
there you go.
So we're going to start by going into my TradeZella. This is where I can journal.
And by the way, very, very few traders will show you verified broker statements like that, okay? So for anybody who's skeptical, there you have it.
Everything. This is where I can dissect everything. I can go back through and recreate my trend lines. I can see how many contracts I traded, how many points, how many ticks, my commissions, my net ROI. I can see how much I was down, how much I was up. I rate my trade. I gave myself 4 stars on this trade. You can see my risk on this trade. You can see my R multiples. It was 1.9.
And again, risking 15,700 to make 29,000. Very good risk to reward.
And then the coolest part is you can tag your setups, you can tag your mistakes. You can also see all of the notes that I gave myself for this trade and the running profit and loss. How much?
This is something you see with traders who are really good. They keep very meticulous notes and they're journaling their trades. They're winning trades and they're losing trades. You can see all the notes that she's taking. She's paying very close attention. It's not just like some set it and forget it. She's thinking about every single detail and going over it with the fine-tooth comb.
I was down, how much I was up. So we're going to start by going through the notes so that I can also remind myself what was going on, what was happening here, what was the mindset. And then I also have a playbook that I want to run you guys through as well. When you add a playbook to your TradeZella, you get to check off, first of all, the satisfaction you get from checking off a box. When I tell you, that is so satisfying. And then seeing this, 2 out of 5 checklist did everything align. It's the coolest. But
a sign of discipline. This is a sign of a disciplined trader. Do you have a checklist? And when you're trading, do you have the discipline to follow that checklist? That's something I do, and that's something she does. And that's something you see traders do that have discipline that are effective, because they know that to be consistent, you have to execute consistently, and your mind is all over the place often. And so having documented, clearly articulated rules with a checklist to go through procedurally, just like a pilot. You ever seen a pilot just going off the checklist before they take flight? It is the difference between life and death.
You'll see the playbook that I have here. This is a 3 touch point break playbook. And then these are all of my entry criteria, my exit criteria, and market conditions. And then we will check these off as we go through it. Okay, so first let's go through my notes just so that I can refresh myself on what we're going to go over. So this is the second trade of the year. This is my true 3 touch point breakout trade. Overview, I'm giving myself 4 stars on this trade, largely due to the breakout of a 3 touch point trend line. While the trend line did not have as much data behind it as I would have liked, only a week's worth of data, it still met the criteria. When I say that it doesn't have that much data behind it, it just means that I don't have that many candles, that many bars, that many days behind this trend line. So I did get 3 touch points, but those 3 touch points were all within a week. I usually like to see weeks worth of data. I mean, if not more, months worth of data. The touch points that you get on a trend line over the span of a month, a few weeks, a few months, it holds so much more weight than just simply a week's worth of data with the 3 touch points. So I still checked off my criteria, but it just didn't have as much data behind it. The setup details. This was a trendline break.
Okay, so one point on that. A lot of times traders are looking for the perfect setup, right? The perfect setup for the stars to align in just the most perfect way for them to take the trade, thinking there's a perfect setup and that things will align perfectly for them, which is usually not the case. In fact, almost never. Every once in a great while, you will get a perfect setup. Now notice, this trade was a banger, man. She closed $29,000 on this trade, and she's saying it was imperfect. So that shows you that your ability to actually adjust instead of waiting for things to be absolutely perfect is key here. You have to know what good enough looks like, and she knows that, and this is evidence.
I entered on a trendline break with 3 touch points, despite the limited historical data. Position size. I came in heavy. With this position. I turned it actually into a higher risk trade. So I could have made this a low risk trade by simply reducing my position size, but instead I actually did the opposite. I came in heavier. This trade was my record trade at the time. When I closed this trade, that was the most I have ever made in a singular trade before.
Okay, so just imagine that. You click a button, and $29,000 comes out. Click a button and $29,000 comes out. That's what she did.
It's $29,871. It was very close to $30,000. And to be honest, I probably thought I made $30,000 and I probably closed it when it said $30,000, but the difference between spread and commissions brought me down to $29,871. Okay, let's go over where I entered this trade. We've got a few downward trend lines here. We've got this higher time frame trend line starting all the way back from the very end of 2023, then coming in with a second touch point here at the end of January, very end of January, January 31st. So 2 nice touch points here. And then I decided to come in steeper, track price steeper and steeper. So we've got yet another steeper trend line here. This is the 3 touch point trade. So I'm going to zoom in now so you guys can see where these higher time frame trend lines come in. But now let's zoom in and get a closer look at this trade. So when I decided to come in steeper, this trend line here, when I am coming in steeper with my trend lines, I always want to use previous touch points so that it looks like this fan. It looks like a fan of downward or a fan of upward trend lines. So I'm always using previous touch points to continue to track price steeper and steeper. So when we...
I like that, because what you can see if you do that is you can see how the trend is changing with time, right? You can see, is it getting stronger or is it getting weaker, which is smart.
Came in with this steepest trend line. This was the 1, 2, 3 touch point trade. Almost 4 touch points, but not quite here. So we've got 3 touch points on this downward trend line. We've got the entry based on the break here. So my entry, I got in at 888. So we're looking at around here when the price broke this steepest downward trend line. So far, we can go down and check off our setup. 1, we did have a trend line break. 2, this trend line did have 3 touch points. But now 3, this was a high risk trade. When I get into a trade and I am calculating my risk, the risk trails. It always trails along the opposing trend line. But my initial risk is if I get into a trade and the price immediately goes against me, that's going to be my initial risk. But the risk will always trail. It continues as price progresses and continues in my favor. The risk becomes smaller and smaller and smaller.
Okay, so she's just talking about a trailing stop, which is one of the best strategies a trader can utilize, because what it says is as the market moves your way, you continue to reduce your risk and increase your ability to capture more profit, which is awesome.
Smaller. Eventually, risk will be in profit if price does continue to trend.
Exactly.
In your favor. But the initial risk is what I'm always going to be showing you guys. So if I get into a trade, immediately it goes against me. This is the amount I'm willing to risk on the trade. So first things first, we entered at 8.
Okay, pop quiz for everybody watching this right now. Do you predefine your risk before you enter a trade? Do you always predefine your risk before entering a trade? Yes or no? It's a yes or no. This is the difference between the amateur and the professional. One of the biggest differences. There are many, but it's one of them.
88. I went in 20 contracts. I was willing to risk $15,000 if this trade does not work out. Now, before I start, I do want to go through my initial balance so that I can see the percentage. My beginning balance when I got into this trade was $123,000. So, Alexa, what percentage is 15,000 of 123,000?
15,000 is 12.2% of 100.
Dude, I've been heavy on the risk. Both of these trades are very risky. Came in real heavy. Now, if you guys saw my previous video where I broke down my first trade of the year in platinum, I made $10,000. There was an area or an opportunity to cut my risk in half, and I was presented with yet another opportunity to cut my risk in half. I did not. So this year, I am trading bigger position sizes, and I'm willing to give up more to see this thing through, my boy, if you get what I'm saying. I could have mitigated my risk more in this trade initially. So let's try to break it down. I'm going to try to make sense of this. It's not going to flow beautifully, but I just want to show you guys what I could have done a little bit better, what I did instead, and what happened during this day. So
Okay, pause. She made $29,000 on a trade, and she's thinking about what she could have done better. Do you have that level of dedication and commitment to excellence? You make $29,000 on a trade and you're still looking at what you could have done better. That is a level of commitment to excellence that is very unusual. And that is what this takes. So I want to point that out because that is what this takes. Trading consistently well takes that kind of commitment where even when you crush it, and you make twice as much as you risk, which is a banger trade, and you put $29,000 in the bank, you're still like, hey, what could I have done better? I'm still not satisfied.
So the entry here, now it says that it's a day later, but I entered at 888 and this bar didn't even make it to 888. So I'm almost certain I entered at this bar here. This may be also because I had bid adjustment toggled on. I've been experimenting with the bid adjustment. If you guys trade on TradingView, you know there is a bid adjustment for the futures market, for futures charts that you can toggle on and off. And it simply just helps with when contracts change from one to the other after it expires. It helps with the gaps and it helps create this easier flow of price instead of so many gaps. And when I'm trying to track price with trend lines, the least amount of gaps I get, the better. So I'm still experimenting with that. If you guys have any advice or have any insight on the bid adjustment, the pros and cons, I'd be fascinated to hear it because I'm still experimenting with it to see if it helps or hurts my trading. But so far, it's been mostly positives. So we've got the entry of the 3 touch point break. How could I have risked less in this trade? My initial risk was $15,000. How could I have cut that in half? Well, let me show you. So speaking of capital, your digital footprint is capital. And the amount of scammers and spammers out there, they are truly trying to steal your capital. And if you guys know me, which some of you guys do, if you know, you know, my number one come up here using another touch point here. So I could have came in with this last low, this pullback here, and then my risk only would have been, let's see, it would have been around 879.30. So if my trade wouldn't have worked out, my stop loss would have been around 880, we'll say 880.40. I would have been able to only risk $8,000 for this trade. That would have been best case scenario, but that would have also been a loss. So if I would have gotten in because of the break, I would have also been stopped out. That $8,000 would have been hit. I would have closed this with a loss. So there was a benefit to risking more because it kept me in this trade.
Okay, so that's a really key point. So we can see here that she entered here, okay? And let's just zoom in on what she's saying, just in case you guys aren't following. So she's entering here, right? And then she's saying that she could have risked less. She could have put her stop loss right here at this support area, right? But she didn't. She chose to put her stop loss at this support area. Notice she said she draws these lines, and the line is where she trails her stop. So that means her stop would have been down here. So she's pointing out that she could have reduced her risk by half. So if her stop loss was here, she would have been risking half as much. So instead of $15,000, something like 8,000. However, she would have lost. She would have lost that 8 grand and she would have been stopped out. So the take home point here is that if you use tight stops, usually you will get stopped out more often. And in this case, her being willing to risk twice as much was the difference. Now listen, was the difference between losing 8,000 and making 30,000. Think about that for a second.
It ended up pulling back. Now, why did I stay in this trade? So let me kind of go over where my initial risk should have been, where it would have been, and where it technically was, and why I ended up holding and risking more and using my original trend line to mitigate my risk instead of this steeper trend line. So when the price came down, you see this giant red bar here. We had a news day, price moved pretty quick, pretty far, and crossed my steeper trend line within the day. To be honest, within a few minutes. And I was willing to go ahead and let it come all the way to and break my original line, which I'm going to scoot over here so you guys can see a little bit better, my original upward trend line in order to take this loss or solidify this loss. So now I'm going to change this trade risk to this original upward trend line, ever so slightly up. It almost looks horizontal, but this is an upward trend line that's drawn from a higher time frame. But we created a third touch point here. When I tell you I was sweating on this news day, I was sweating on this news day.
Yeah, I bet.
The price came down and literally kissed my upward trend line, created yet another touch point on this upward trend line. My stop was on the other side. If the price was to get to this 873-ish area, give or take a few cents, I was going to be willing to solidify that loss. It would have been around $15,000, 15.7 to be honest. So this steeper upward trend line, I said, delete. I'm going to let this higher time frame line mitigate my risk and dictate my exit.
Okay, so I want to make a point about the mental game of trading, because a lot of traders only talk about the technical game of trading, but they don't talk about the mental game of trading, which is managing your mind and emotions while you're executing your trades. And the amount of discipline and presence, inner calm that anyone would have to watch a trade go in profit. Now notice she entered here. So she entered, and shortly after she entered, the price went in profit. But then look at this huge red candle down. Okay. So shortly after entering, she goes in profit, and then immediately the price plunges downward, and her P&L is close to $15,000 negative. And what she was able to do was stay cool as a cucumber, baby, cooler than a polar bear's toenails, and just chill. And then what happened? The price went within probably a few $100s of her stop loss, almost losing $15,700. And she's just like, you know what? I'm happy to lose $15,000. That's what I said I was going to lose. And I predefined my risk before I entered the trade. And I knew that's what I was willing to risk. And I was willing to risk that. And so I'm willing to risk that because that's how you execute a strategy properly, is you respect your rules. However, she didn't panic. And then the trade went her way. And I just want to make a point about how much discipline and patience a person has to have in order to be able to pull that off. It's a lot.
So I held. Okay, so price created another touch point on this upward trend line, and then immediately the days to come, the days after, sense of relief. We got an upward bar, we got a green bar, we got another green bar.
And then immediately that whole move, look at this, that whole move, right? That sent her P&L plunging down negative 15 grand. Right after that plunges up, races up and then retraces that whole move down. So that's how it is when you're trading, man. That's exactly what things are like. And that's a good example of the kind of turbulence that you have to be ready for. You know, like on an airplane when you hit turbulence, yeah, it's like that. But imagine that with your money flying all over the place.
We are continuing to break these steeper downward trend lines. We got a sense of relief after every upward bar, after every green bar was coming back in our favor. So we're getting out of drawdown, bar after bar after bar. Price is continuing up now. Now let's go over the exit. I closed.
Okay, so she enters here, right? So far, let's just trace this back. She enters here, price goes slightly in her favor, plunges down, almost stops her out, probably comes within a couple $100s of stopping her out, and then immediately makes a double bottom here, right? One bottom here, second bottom here, and then rips up, okay? And then you get one small pullback here, you get another move up, you get another slightly bigger pullback here, and you just have this kind of nice gradual upward movement channeling up, and she exits right up here, okay? Near these prior lows. So let's see how she explains, why she exited there.
Here's my trade at 918.62, this horizontal level here. Now let's zoom out and see how many touch points this has. So the likelihood of platinum to touch this key level, to touch this area of either support or resistance, depending on which side the price hits it on. The likelihood of the price of platinum getting to this level and then turning around was fairly high. So we've got a touch point here. I'd say we've got a touch point here. Now close enough over here, price hung out around this level.
So key point, when you're in an uptrend, as she is here, prior lows are resistance areas, which are reasonable areas to take profit. So right here would be one, 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 right here would be one. So any of those prior lows is a reasonable place to take profits.
Price touched it again here. So we've got a few solid touch points and then a few.
And one more point on that. If you have an area where there's a lot of prior lows, right, where there's a cluster of them, that's even more reason to take profits there, because then you have agreement that traders see that as an area of resistance.
Few areas where price just really hung out around this area, and especially over here. So the price got to this level.
And that's what you've got here, right? So you got prior low here, prior low here, prior low here, prior low here, right? So that's why she drew that line there. And also, this is what she's saying. This is why she took profits there.
And then did.
And look at the trade. This is extraordinary, okay? Look at the trade. That was such a key area that as soon as it hit that area, look at what happened afterwards. It went down. So she sold almost perfectly at the high, which is incredible.
Truly what it was supposed to do, bounced off, rolled off, rejected it. Now it did pop through it, and I'm sure a lot of people thought, oh, this is it, we're going. My entries are not based on these horizontal levels, simply my exits are. Now I do use these horizontal levels as confidence, as confirmation for my entries, but I do not use these solely for my entries. Exits, yes, all day, love it. Best case scenario, I am exiting because of a break of a trend, but if I am exhausted, I'm done with my trade, and I'm looking for an area to close it as soon as possible, an area of support and resistance or these key levels is going to be next best scenario. So I closed my trade. simply because it got to this level here. Okay, so let's go over the executions here. I entered my trade on February 12th, and then I closed my trade on February 20th. This was a net profit and loss of $29,000, 30,000 bucks.
And I just want to give a shout out to Liz Wee in the chat. And Liz Wee, I wouldn't say that she's gifted. I would say that she's practiced, okay? She used to be a hairdresser. This is not God-given gifts. This is developed. This is talent that she earned through hard work, dedication, perseverance. She's been at this, I think, 8 or 9 years, okay? This is something that you develop. Talent is something that you earn and you get with hard work. It's not like a gift that someone gives you.
Now,
And even if you have gifts as a trader, you have to develop them. So regardless, this is a product of hard work is really what I'm saying to you.
if you want to kind of bring this down, scale this down a little bit, if you were to be trading 10 contracts, you would have made 15,000 bucks. If you would have been trading 5 contracts, 1 contract. So you guys can kind of scale that down yourselves, because I literally have math stage fright, to where I can't do math when I'm recording. So, and let's be honest, I really can't do it even when I'm not recording. So I went long right here on this bar. Price is coming up, boom. Long position here. Now we're feeling good. Okay, we're going sideways. We're not going anywhere. We're feeling really good. And then boom, one big red bar. Now, if it would have broke, that would have been a loss. That would have been my $15,000 solidified loss. Price does such a sporadic, hectic move on a news day that I had the guts to hold through it. And
She had the guts to hold through that. It's just so awesome. I just love that. I love that. To me, it's inspiring. It's inspiring. For all the times that you've ever panicked out of a trade, just think about this one right here, okay, from Tory Trades, clocking 29,000.
let this original line dictate staying in. I was willing to let price settle since that was such a big move, and it did. It made a sporadic move down, aggressive, steep, big, and then just puttered out, and then we're back to our average price action.
Made a double bottom, right? Slightly higher than the prior bottom, and then ripped up.
Boom, normal movement, normal movement. Okay, I'm gonna do one more trend line, or one more example to show you guys if I would have closed based on a trend line instead of a horizontal line, instead of an area of support and resistance or a key level here. My exit would have actually been, okay, I would have used the last low here, touch point here. I would have tracked this steeper, touch point, touch point. So I could have waited until 905 to close my trade, which would have been 888 to 905. Still a good profit, but I wouldn't have been able to maximize and get the most amount of this move here. So yes, we've got an upward move. It's not the most beautiful. It's not one of these or one of these, which is what I wanted so bad. I wanted a beautiful move like this, a beautiful move like this. I didn't. I got a mediocre ebb and flow, up and down, ever so slightly, not as aesthetic upward move here. I still got it. I still was able to get in on it, even though it wasn't much of a move. It wasn't the one I was expecting or the one I was wanting. And for the most part, I want to let you guys know that that truly is why I was willing to risk so much for these trades, because I wanted to catch something like this. I wanted to catch something like this. This upward move, this downward move, but that's just not what the market gave me. The market didn't make one of those big moves, which I wanted on the previous trade that I'd went over before this one. I wanted one of those big moves, but it's just the market wasn't giving me one.
Okay, another great example of very solid mental game, okay? Mental game, again, is not how you manage your technical trades. It's how you manage your mind and emotions. And a lot of traders neglect this. And what you see here is one of the hardest things to learn in trading, which is there's something that you want and you have an idea about that, how that trade's going to go. But then the market does something different. And this is very often what happens. And the question when that happens is, can you adjust? Or are you going to try and force the market to do what you want? Because the chart is not going to do what you want. It's going to do what it wants. The chart does not give a sh about your thoughts, does not give a sh about your desires, does not give a sh about how much money you want to make or what you think it's going to do. Okay. It's going to do what it's going to do. And that has nothing to do with you, and nothing you do is going to affect it. It's like the ocean. Okay. It's like surfing in the ocean and trying to control the wave. You have nothing to do with what that wave is going to do. So what can you do? And what's a good surfer do? The surfer rides that wave, baby. He has an idea of what he thinks is going to happen. That's why he starts paddling out into that wave. But then once he makes contact with that wave, you have to adjust and you have to fuse. You have to merge. You have to flow with it. Okay. So you go with what you think is going to happen. But as you make contact with reality, as you enter that trade, you start to work with what shows up. And that's what she was able to do. She says she wanted a big ass move like that. A big ass move like that would have been like 5 or 10 times what she made. But instead, she was able to adjust, and not only adjust, but still close a stellar, incredible trade for $29,000 profits at a really, really good exit. Okay. So really props to Tori Trades on that for being able to adjust and work with what reality is giving you. Work with what the chart is giving you. Again, it's very hard to learn how to do that, and it takes a lot of practice. So you can see that she's able to do that, and we all have something to learn from her with this example.
So I was willing to risk a little bit more in order to be in on a move like this in case we were in one, but we just weren't. We weren't. I was up 30,000. Price got to this horizontal level, this key level here. I closed. If I wanted to stay in this for a little bit longer in hopes that maybe this was going to be a move and maybe I was willing to give up some of that 30,000, then I would have closed around this 904, 905-ish area when price broke the trend that it was trending along. But I'm going to delete these upward trend lines now since that's not what I used to close my trade. It wasn't what I used for my exit. I use this horizontal level here. So let's go over the playbook first and foremost. So I'm zooming in to the trade here. I'm going to my playbook here in TradeZella.
So this is her setup, okay? This is the criteria that she uses to decide, what her strategy is.
And these are the criteria that I gave myself for this specific playbook. This is the 3 touch point break playbook. So I got 2 out of 5 of my checklist. The trend line had 3 touch points. Love it.
Remember when I said before that traders are looking for the perfect pattern and the perfect setup? This is a 2 out of 5. A 2 out of 5? Are you kidding me? With her criteria, and she still had a banger trade. So it's really not about waiting for the perfect setup. As I said before, it's about knowing what good enough looks like.
I could have checked off this low risk setup if I hadn't come in so heavy in position size. So I came in 20 contracts versus my 10 contracts. So I wasn't able to check off this low risk setup. If I did, I would have been able to check that box. Okay, exit criteria. Was the opposing trend line crossed? No. Was a support and resistance level hit? Yes, I was able to check off that one. Okay, so market conditions. Are we in a trending market? And the answer was no. We were not. We're actually in consolidation. So I was able to capitalize on a long position on an ever so slightly upward trend. It didn't last very long. We just weren't in a trending market at the moment. This right here is an example of a trending market. Getting in on the current trend. The trade that I took was not within a trending market. It ended up going sideways for actually a week or so after I even closed the trade. So we were actually in consolidation when I placed this trade, so I didn't get to check that box off either. So in my playbook here, I was able to check off 2 of my boxes here. 1, that the trend line had 3 touch points, and 2, my exit criteria was hit the level of support and resistance. So that is my playbook here for the 3 touch point break. And then let's go down to the stats here, and we can see I labeled this a trend line break. I also labeled this a high risk setup, and I also labeled this a 3 touch point break. Not only was it a break of a trend line, but the trend line had 3 touch points and it was higher risk. I could have made this lower risk. I could have labeled it low risk if I had reduced my position size, but I didn't.
If the only thing you took away from this video, okay, if you clicked on this video and you go, oh man, someone could make $29,000 in one trade, and then you watch this video, and the only thing that you took away from this video was to establish a very clear checklist with the specific criteria that lists your rules and procedures for entering your trade, that would be worth it. Just that alone, okay? If you came onto this video and you were wondering how to close a trade for $29,000. One, and you're like, okay, I need a checklist with very clear rules, then your time here was well spent.
Now here's the mistake. I held through news. The news day created such an aggressive move, one that made me sweat and one that made me resort to a higher risk trade and a bigger loss if the trade did not work out, using a less steep upward trend line. Okay, and then here's my running profit and loss. Close that bad boy at $29,000. $29,905 was the gross, I believe. Okay, missed opportunity. I missed the short position earlier in the month, but I'm glad I was able to capitalize on this trade instead. And then the last thing is exhaustion factor. So holding trades over the span of a week and being in X amount of drawdown and then being back in profit, it's just seeing those numbers fluctuate and being in for a week, give or take a few days, more or less, could very well dictate closing early, not staying in for the entirety of the move. But I will say overall, this trade was solid and it ended with a record profit. So I'm happy with this trade. I gave it 4 stars, mostly because of the entry criteria, the exit criteria. I'd say the downsides to this trade were that I came in too heavy. You know, even though I made 30 grand on this trade, if I really wanted to give this trade 5 stars, I would say it would have ended with a $15,000 profit and reducing risk initially. So coming in lighter in position size. Okay, so all in all, this was a record trade at the time. It was $30,000. I'm sure you guys have seen me post that trade all over the place. I was super proud of it. All right, guys. Well, that was your trade.
All right. And props to Tori Trade for such a banger trade. And, you know, just so you know, like, it doesn't stop there. This is actually a $40,000 trade that she closed. $40,000 in one trade. So if you want me to review that one, let me know in the comments and I'll review that one next time. Thank you so much for watching this video. I'm Brent. If you want more info on my strategy, I break down my 3 favorite trade setups and I break it down for you for free in a downloadable PDF at tradesbybrent.com/3setups. You can also go to the link in the description. And if you want to trade with the tools that I'm using, hit the link in the description as well. And I'll link you out to the favorite tools and strategies that I'm using. You can also hit me on the socials at Trades by Brent. Like the video if you liked it. Hit subscribe if you want more. And I'll see you next time. Thanks for watching.